Good weekend, all. I'm Epstein, and here we are with your SPDR ETF stock market wrap-up, your weekly edition. And this is for Friday, the 5th of January, 2024. And what a week. You know, today was the big jobs report. I want to talk about that a little bit here. But before I do, I've got to tell you, I want to thank you all. So many of you have responded to our year-end sale. Now, I have brokers, I have clients, they have asked me, hey, can you extend it to Sunday? People are out of town. They see it. They don't want to do it for whatever reason. How hard is it? Some don't have computers with them, and they say it's too hard over the phone. I said, okay. I will extend. So it says through January 5th now. It's going to go to the 7th. It'll shut off at midnight on Sunday. It is by far, I think, the best first week sale we've had in a year that I can recall. So it's really worked out. This is for new subscribers, and for those that have an existing monthly updates, they may want to go to the 1 year. Now, I'll give you an idea. You're going to end up, the cost, if you want to watch your SPDR ETF video in the morning, for a year, the whole cost will be about $8 a month. I think if you want to spread, you can do that. Now, think about it. 22 videos. Each approximately 15 to 20 minutes long. I was putting them out this week. They were 25 minutes long on average because we have so many new people in, and I wanted to be certain that they understood what we did and how we did do it. That's an awful lot for $8 if you think about it. Now, the other neat part is you can write me at any time questions, so I get some time. I typically create a 30 to a 2-minute long video for you, and I answer you. Instead of writing, I answer. I'll bring up the charts and give it to you. People abuse it, I won't help you, all right? Every now and then you get something. I think you'd find from my clientele, I do a very good job and I'm very responsive to them. So, a great way for you to start off your year. Can you afford the $8? That's up to you. You don't want to do it, don't do it, all right? How do you get it? Go to iraepstein.com. Under the word research, come up here. When you go there, you won't see a discount. You're going to see our standard price. You move the button over, make sure you're on the yearly, put in everything, your name, all your credit card. When you hit pay, the 40% off will show. You'll see the retail, you'll see the 40 off, and away you go. This will not work after 12:01, at 12 midnight and 1 second Central Time, Sunday night. It's over. Don't write me. I was gone. I couldn't do it. You have all the reasons to take advantage of it, okay? And I appreciate you all doing this. All righty. So let me shut that down and come over here, and let's go to the charts. Now, I asked a lot of people, all of you, what would you like me to cover this week? And I had a number of people that came in with the same thing. Now, I don't know why some of you wrote Tesla. I cover it here. It doesn't make sense. I cover it in greater detail in the morning subscriber video, but you get enough here. I'm not going to give you more than you get here. This is a free video, and that's it. So I was a little surprised at some of the ones that came in there. But what we got was a request for SCHD by a couple of people here. And this is a fund that tracks the total return of the Dow Jones U.S. Dividend 100 Index, and it measures the stock performance of high dividend yielding U.S. companies with a record, keyword record, of consistently, in quotes, paying dividends selected for fundamental strength relative to their peers based on financial ratios, okay? And it's Schwab's U.S. Dividend Equity ETF. And this is the weekly chart. Notice how it started coming back down. Now, you don't expect dramatic moves in something like this, and I don't think you're going to get them. But it does trend. So, for example, you were around the $68 range. You got up recently into the $75. And if you go back on the chart, remember, this back to all the way to 2022, I'm showing you the highest where we're 85 down to the recent about, what did I just say here? $67, $68. So about an $18 range. That's the way you look at it. Is it in an uptrend? Most certainly. Higher lows, higher highs. Now you have an outside week up that just occurred this week. Outside weeks are fascinating. If you've taken my outside day trading course, you learn the importance. Right now it's a continuation pattern. The trend was up. You've made higher highs, higher lows, and at the end of this, right, I don't know if that's the end or not, you went sideways, now you got another outside day up. If the high of an outside day up is taken out, where might you go? Well, it's going to be higher than this. It'll probably be a Bollinger Band. But what if you take out the low of an outside week? And you do it this week coming up or the next week. Well, then until it gets back over this week's high, the odds are it's going to start looking at the key moving averages under the market and try to get to them. So it's a cool tool that you look at. Nothing works all the time, but this is a high percentage tool I've learned over the years. And guess what? Your Bollinger Band's right here at 77.34. So from where the market's at, maybe there's another dollar in it. I'd be cautious, and you're overbought. What do I think it's setting up? The possibility of a reversal more than a continuation because it's overbought and because you're so close to the resistance. So fair warning. When you come to Microsoft, this is one of my favorite stocks. I think it has pricing power galore. Did you see what they did this week? So the new keyboards that are going to come out are going to have their AI key built right in, and you'll hit it. It'll activate AI and help you write newsletters. I haven't seen it. Nobody has yet what they're doing, but I know what they're building because we're playing with it already. We're using their alpha versions, and it will work on spreadsheets and some of the other parts. We're using a lot of AI as I'm writing right now a program for a certain type of trade to take place, and we've been off of it for a month. We're going to go back on it this coming week in a major fashion because I don't have any more projects I have to finish at this point and get back to where we're at. But I think I'm on to something for an interesting service. But you now have the trend down. Trend down, bias up. Why is the bias up? You're over the 18-week average. If the red line of the slow stochastic closes under 79, the odds favor that you're going to get back or make a run at wherever the 18-week average is at that point in time. Right now, you have two things fighting. You have the trend down, the bias up, and you got the embedded reading. But I hate the pattern. You get real bullish again if you take out last week's high of 377.16. If the market weakens and you see it, I don't think it's a buy on a break. Maybe that's the best way I can explain it. In KRE, as we came up all through here, if you went to the daily chart, they peaked on the slow stochastic reading. Now you're at an area here where you got up and over the Bollinger Band. What's the odds of staying over a Bollinger Band? 5% of the time. That's it. Take a look at this chart. How often do you see it outside of the band, up or down? And when it gets away from it, it immediately moves like it did, right back in it, over and over, the support. So why would I get bullish up here? It's fool's play. Okay, you'll say, well, it's going higher. Okay, I wish you the best with it. I'm not a bear. I don't want to be bullish. There's a very big difference between the two. Are you embedded? Not yet. You have to have 3 weeks in a row where your slow stochastics are staying in a chart over 80. Do you have that? Well, let's count them. Week 1, 2, 3. You got it. So you got your bullish embedded reading. If the red line closes underneath 79, the odds favor you're going to make a retracement. I'm not liking what I'm seeing with embedded readings all over. I like that they're saying buy the market here. I'd rather be wrong buying until that reading is lost. But if they get lost, I think you're opening the door for a correction of a little bit of size. Why? 9 weeks in a row up for many of these markets? You don't think that you had a heck of a run at the end of November and December and maybe you got to give back a little? MCHI. All right, so this is China. I don't like anything about China. Now, I like the people, but I don't like the policies. And the market doesn't like what it's saying. Now, this is a year, is China going to do anything with Taiwan? Do you honestly think the Biden administration or if you get a new president other than Biden, they're going to be friendly to China. I think the tariffs stay in place. I think that everybody's going to do as they are, and that's the rough part. So China's got to find its own way out of this, and I don't like the people they've chummed up with, Iran and Russia. Is that going to really boost your economy? You need the West, the consumers. So we'll see what they can and can't do. Europe at least has a much more open mind to them than the United States does at this point in time, and that's a good thing. I don't like that we're not friendly with them. I wish we found a way to be friendlier, but I wish they'd open up their market and pay more attention and be observant of Western rules of intellectual property, other things. They're feeling the pain. COVID moved a lot of American companies and European companies, manufacturing centers and the like out. Not everything, it's not going to happen. I just got a shirt that I wanted yesterday, came in the mail. And I had a feeling I knew where it was made. And it's a nice shirt, fairly expensive. China, of course. But I think it's top quality. Okay. XLI. Nah, straight up run. Embedded reading, yep. Week 1, 2, 3. So embedded readings are great because, number one, they're telling you to buy the breaks in the market until the red line's lost, and then it's telling you the market's going to give you a heck of a correction in most cases. The word is most cases. I wish I could tell you it was every single time. Nothing is every single time except from the IRS, you got to pay your tax, and at the end of the day, we're all going to heaven. I assume it's heaven. XLE. We have a higher high and a lower low. This is very much sideways action. I don't see anything positive in this chart whatsoever. In the dollar. So we've had a bounce to get back in the Bollinger Band. That's all I think it's done. I think that you're right at a cusp on the daily charts in UUP. You're either good or bad. It's right now, right here. And you know what I was telling you this morning if you were a subscriber on that. In the gold market, still bullish. Now, I like what gold did. Let me explain. You have 216,000 new jobs. Remember I said we discussed the jobs report. 216,000 new jobs. What did the wages do? Year over year, month over month, they both went up again. Another 1/10 and 2/10. Well, guess what, folks? You can talk all you want. Oh, wage growth is slowing. It's slowing, but it's not going down. Number two, 216,000 jobs is not close to 100,000 new jobs, and I believe that in order for the Fed to give a number here that we think is comfortable that they should start cutting rates with, I think it should be under 140, maybe 130, on its way to 100,000 new jobs a month. They don't want not to have new jobs, but not 216,000. So I think this report nailed the market. I think that the people that still think you're going to get a March rate cut have to have CPI and PPI numbers collapse. First thing, I don't know if they will or won't. We get both those numbers on the end of next week, this coming week coming up. Get both. So that'd be the first set. And you're going to get 3 total sets, I believe, of those numbers. And 2 more, you heard me, 2 more jobs reports before we get to the March meeting where the Fed may or may not do something. I do not think the market is right. I think they're over exuberant with the idea of 5, 6 rate cuts. I'm not seeing it. Why do you need a rate cut if you've got wages going up and you've got full employment at 3.7% in America? Would you explain it to me? And under the hood, they'll look at it and go, well, look at the households. Look at how these people age so-and-so. They're not able to get the jobs they want. You do realize that's watching paint on the wall dry, and it's got to work its way through, and you got to prove it's that way. What about the seasonality? Could that have been part of it? How many people go out in December looking for new career jobs? Not a lot. Temporary work, yes, but not a lot. How many people go out and buy new homes in the middle of December? Not a lot. Okay? Same thing. So I'm not in agreement with a lot of this, and I'll voice it. If I'm wrong, I'll tell you I'm wrong. But the data's got to prove me wrong, not what the market thinks. And the data right now is against what the market thinks. In SLV, well, you're into a support zone. You're at now the 18-week, the 200, and the 100-week. Is the market bullish or bearish? It's neither. You've got higher lows, lower highs, trying to figure out what to do. Now, if it can crack through here, the 2061 level, it turns bearish. And that on a weekly chart's lower highs, lower lows, and you open the door up for the 1975 level. In Tesla, I don't know why you wanted me to cover this. I've been covering it. The market's got a lower low, higher high. It's very much neutral. The fact that Kathy Woods jumped in with $25 million doesn't impress me. She, two-year record hasn't been very good. She made money this year, by the way, but who didn't if you're a tech stock person? Now, did she double and triple her value, which is what I would think you're looking for from her, and she did not. So it just happens to be, I think she got lucky at a point in time, did exceptionally well, and like so many flashes, I'm not saying she's a flash in the pan, that bulb went out. Now we'll see what she does in a market she's got to work very hard for. In Uber, lower highs, lower lows, time to be out. And you know Uber was one of my favorites. How often did I say it? Now you got to be out. I think the embedded reading will be lost this coming week, and you could get a good-sized retracement. Could be a 10% break coming in this market, so I'd be a bit cautious on it if you lose the embedded reading. Let me come back to that. I'm wrong that you'll get much of a correction unless the red line closes under that 79 level. Let's come back over here now. There we go, pushing with the wrong way. CCJ, the chemical corp, well, you're down to the support. So you lost the embedded reading. How often do you hear me talk about this? If you lose an embedded reading, you'll often go back to the major moving average, which is often, not all the time, the 18-week average of closes. You tell me you didn't lose it back here. Look where you were. I think you're going to that red line before you go through the highs. Kaboom. Google. Overbought, hit its objectives. Time to be gone. Maybe more correction out of the Mag 7. We already saw Apple get its lunch handed to it. There's more. You can only keep going with these old phones and do so much before somebody with know-how says, hey, maybe this thing's a little overdone. But they have other businesses that are great. So I wouldn't get overly bearish on Apple. I think it's a phenomenal company, but I think they'll get the message. We want something new. We got away from flip phones. We got into the smartphones. Apple, what's your next big thing? Come on, you guys are brilliant. Let's see what it is. All right, with that, I want to remind you that the sale will go on until Sunday at 12 o'clock p.m. Central Time, 11:59 and 59 seconds, and the computers will shut it off Central Time, and that's it. IraEpstein.com, under the word research, you can move your cursor up here. It'll take you there, too. Whew. Long day for me, long week for me, believe it or not, a big week. And I can't wait to go back to just the analysis and finish up charting courses and the like. I'll catch up with everybody come Monday morning. Have a great weekend.